Hey, what's up guys, welcome back to the channel. In today's video, we're going to be going over an electric vehicle stock that's setting up to be one of the best buying opportunities in this market right now, given just how much Wall Street has been ignoring it. Now, this company has been flying under the radar for most people, but it's actually one of the fastest growing electric car OEMs in the world with over 50,000 cars sold worldwide. I'm of course talking about Xpeng Motors stock, or ticker symbol XPEV. In this video, I'll be going over why exactly this stock could be the best buying opportunity in the entire EV space right now, and I'll also be going over some price targets for the next 3 to 5 years near the end of the video. So before we get into it guys, make sure to drop a thumbs up if you find this video helpful, and also hit that red subscribe button. Now, Xpeng is actually an incredibly new stock to the US market, as they went IPO in just August of last year. In this IPO, they raised $1.5 billion at a price of $15, which was actually an upsize from their initial planned offering after investor demand for the IPO turned out to be much higher than expected. And in a matter of months after that IPO, the EV craze caught the stock quite significantly, which saw shares skyrocket to $70 back in November of 2020. However, since then, we've seen the stock sustain a pretty strong downtrend starting in the middle of January, which is making many investors ask whether or not this stock is a buy at this supposed discount around $25. Now, long story short, in my opinion, the answer to that question is yes. Now, you see, ever since February, we've seen the market fall into a state where basically every growth stock, SPAC, EV play have really started selling off pretty significantly because of not only profit taking, but also funds and banks simply wanting to cash out of their positions either for tax day or for either rebalancing their portfolios. Even with good earnings, we saw stocks like Alibaba, Amazon, and even Tesla sell off pretty significantly, even though they reported very good numbers after their earnings. And this is unfortunately the very same case with XPEV stock here. Not only has Xpeng been consistently blowing away analyst estimates, pulling record delivery numbers, but they've also been rapidly improving their margins. Gross margins tend to be the most important indicator as to how well a business is operating. It's number one metric for many investors in judging how effective a company's management is able to execute on its strategy. In Xpeng's case, they've been ticking off this box extremely well. In the first quarter of this year, their quarterly revenue reached a record of $450 million USD, which accounts to a 616% increase year over year from 2020. These numbers seem fantastic, and they're very well supported by the roughly 4 percentage point increase in their gross margins. As you can see here, they climbed above a 10% gross margin in the first quarter of this year, which the president of the company, Brian Gu, has said is thanks to their software packages they've been starting to roll out for the P7 model earlier this year. In the software rollout, Xpeng essentially began releasing over-the-air updates for its XPilot 3.0 self-driving platform to its P7 customers. It's very interesting to see how these guys have been able to positively impact their margins despite this worldwide chip shortage that's going on. Given the Chinese holiday season and general demand for cars being pretty low in the first quarter of the year, I definitely expect Xpeng to continue on this very healthy trajectory of adding high-margin software into their revenue mix, all while increasing deliveries going into the end of the year. I mean, just last month, Xpeng launched a brand new car called the P5, which is a much more affordable family-oriented sedan. Their entire lineup now has the G3, which is a mid-size SUV, the P7, a sports sedan, and now the P5, which is a smaller, more practical sedan. They've already started taking reservations for the P5 and expect to start delivering it to customers in Q4 of this year. And the exciting part is that Xpeng is also simultaneously launching a new version of its autonomous driving software, the XPilot 3.5, that they say will support navigation-guided piloting for urban driving. This is essentially similar to FSD on modern Teslas, where this time the software will not be restricted to just highways, like in the G3 and the P7 models. Right now, Xpeng is trading around a $20 billion market cap with a price to sales of just $10, which is very uncommon for the EV industry in general. Tesla, for example, is trading at a price of sales to $18. Granted, both companies are in completely different stages of their journeys. This still presents a really attractive opportunity for investors maybe looking to gain exposure to the EV space right now. Pre-revenue companies in the EV space have been a dime a dozen over the past year, as the SPAC market saw a huge amount of interest. But those companies pose a pretty significant amount of risk, especially for bigger funds and investors, which in turn can allow their share prices to fall back down to earth really fast, as we've seen with Nikola, RMO, and all these other major EV SPACs. The advantage with Xpeng is that you're gaining exposure to not only electric vehicles, but also intelligent software and the EV infrastructure industry in general. Xpeng's autonomous software is all developed in-house using a full-stack development philosophy that allows them to use and achieve iterations much faster to end users through their over-the-air updates. And similar to Tesla, these guys use a closed-loop system to actively collect sensor data from its cars to improve the safety and efficacy of their software on busy roads of China. Another very crucial but highly overlooked tailwind for Xpeng, and one of the fundamental reasons for why this stock could be a very attractive growth story for the future, is the immense support this company is getting from its home country, China. Not only is the country leading EV adoption across the globe, but the Chinese government is a very clear supporter of the digital economy and technology. Xpeng, as a matter of fact, received a $76 million investment from a major government-backed investment firm just earlier this year. The company also entered into a cooperation agreement with the city of Wuhan in China to build a brand new manufacturing plant to support the development of their cars. Now, details are yet to come out as to what models this new plant will be producing, but it's certainly a great step in the right direction, especially when the company is sitting on over $5 billion in cash. That's a pretty impressive number for a company that's trading around a $20 billion market cap. That 5 to 20 ratio is really attractive. In addition, the growth of EVs in China is just plain ridiculous. I mean, during Xpeng's earnings call, the CEO mentioned that EV adoption in top-tier cities has been experiencing a record high growth rate in China with a penetration rate of around 20%. And as of March of this year, Xpeng's G3 SUV ranks number 1 amongst battery electric vehicle SUVs sold in the country, while their P7 ranks number 3. These are pretty darn impressive numbers for a company that's only just starting to deploy its capital to grow the business's production into new product offerings and also new countries such as Norway. As you can see, in February of this year, Xpeng shipped around 200 units of their G3 SUV to Norway, where a lot of reviewers and a lot of media outlets in and around Europe were able to test these vehicles out. Again, this is a fantastic exposure to the European market and could be the gateway for Xpeng to enter the European spaces and potentially even the US market in the next 5 years. So the question on everybody's mind right now is, what is the bottom line on Xpeng stock? Is it really a good buying opportunity here at $25? In my opinion, yes. The cars are great looking, US investors are pretty darn excited about EVs in general, and Xpeng has also been sponsoring quite a lot of content from reviewers in the United States. So it does tell me that there is an urge for this company to enter this US space, just like a lot of other automakers like NIO. Now, it is going to take some time for US investors and even Wall Street to purely understand the actual value of Xpeng, but I do think the risk to reward is just really attractive at this level. I mean, just looking at the share price, you can see that retracement from that $75 peak has been pretty significant, and now the share price is actually trading very close to where it IPO'd, around that $25 mark. It's also sitting at a very nice support zone, and the RSI is also under $40 on the daily time frame. So the risk to reward when compared to a stock maybe like NIO or even Tesla is much better on Xpeng right now. Xpeng right now is trading around that $20 billion market cap, whereas NIO is around that $50 billion market cap, and Tesla is obviously trading well above $500 billion. And Xpeng by far has been the stock that sold off the most in that EV in the China space so far, even though they've been reporting fantastic numbers year over year. You can see we've gone through over 2 earnings cycles and the share price still hasn't reflected the sheer amount of delivery number growth these guys have been seeing over the past 2 quarters. When Wall Street is not looking, when the share price is just going down, even the earnings and fundamental growth is very strong, that's the perfect time to buy, because that means there's a higher chance that Wall Street and investors and funds are going to recognize the opportunity here. Now, I'm not going to say that Xpeng is going to be the next Tesla. That's obviously not the case. Tesla is just a unique company in its own. They have a different business model as well. But in terms of valuation, this company could be valued around 75% or even 80% to the level of Tesla. Not in terms of market cap, but in terms of value to revenue ratio. Now, here on screen are my price targets for 2023 and 2025, and these are based on Xpeng's revenue numbers at a 64% annual revenue growth rate. Now, these numbers are actually based off of some of the estimates from Tesla, NIO, Li Auto, and some of the other companies out there in the EV space and what their growth estimates have been. The value to revenue ratio here I'm using is an 8x. For example, Xpeng's current value to revenue ratio is around 3x. The reason why I'm using a higher value to revenue multiple multiple is because I think down the road, this company is not only going to be just an automaker in the EV space, they're also going to be selling quite a bit of software and obviously charging infrastructure. And as a result, I think the company will be valued much higher than Wall Street is valuing it at right now. Tesla, for example, is trading at a 15x value to revenue ratio, and obviously that prices in their software packages, their energy business, and whatnot. And that's why I'm being a little bit conservative on that end, but I think an 8x value to revenue ratio is still a very good target for the next few years. Now, these are obviously just intrinsic value and fundamental price targets. These are not the actual share prices that the company should be trading in 2023 or 2025. These are just what the fundamentals show us. So Wall Street might be trading this at $40 in 2023, at $50. It's something we can't really predict. It's something that Wall Street is going to decide. But as we've clearly seen over the past 3 to 4 months, Wall Street loves valuing EV stocks at pretty high multiples. So these are just conservative price targets, and obviously make sure to do your own research and look into the company for yourself and deciding whether or not this is a good investment for you. And the risk of a company like this failing, in my opinion, is pretty low, given the fact that this company is very well backed by the Chinese government, and China wants to be one of the leaders in the EV space. And they're not just going to have one company, in this case maybe NIO, be the leader in that space. They're going to want a different exposure, not only on the hardware but also on the software side. And Xpeng has some of the best developers in China, some of the best developers even in the world. They have a branch in Silicon Valley in California as well, where they are doing some of the software development. And as a result, I think this is a very good investment opportunity right now when nobody else is really looking at buying this stock. And obviously the fact that these guys are moving into the European space and Norway is also a great sign that potentially they could be bringing in customers and revenue outside of China as well, which for a company like NIO just hasn't started just yet. But anyways, guys, let me know what you guys think about Xpeng stock in the comment section below. Let me know if you guys enjoyed this video. Make sure to drop a thumbs up if you find some value in this video. Let me know what you guys think about other EV stocks in the space right now. What other bargains and opportunities are there in the market right now? Let me know your thoughts in the comment section below. But anyways, guys, I hope you guys have a great rest of your week and take care.